Hey everyone, welcome back to Corporate Decoder. Today we're diving into Carnival Corporation's latest 8K filing. Sounds boring, right? Well, let's just say there were some interesting votes on where the company is heading that might surprise you, especially if you're invested or planning a cruise soon. This report is dated April 16th, 2025, so it's pretty fresh information. It's called an 8K, which companies use to report important events to the Securities and Exchange Commission, or SEC. Think of it as an official way for companies to keep investors in the loop. In this case, it's about their annual shareholder meetings. The main point of this filing is to share the results of the annual shareholder meetings for both Carnival Corporation and Carnival PLC, which is like their British sister company. These meetings are where shareholders get to vote on important company decisions, like who gets to be on the board of directors and how executives get paid. Basically, it's a report card on how the company is doing and what direction the owners, the shareholders, want it to take. Almost 1 billion shares were represented at these meetings, which means a lot of people are invested in Carnival's future. This shows there's strong interest in the company's direction. Let's talk about the directors. Shareholders voted on whether to re-elect each person to the board, which is like voting for the team captains of the company. All the current directors got re-elected. For example, Mickey Arison, a long-time figure at Carnival, was re-elected with 750 million votes against. Stuart Subotnick got 713 million votes for him, but a much higher number of against votes at 78 million. While he still got re-elected easily, it shows that a significant number of shareholders had some reservations about his role. This could be because of anything from company strategy to past performance. Shareholders got to vote on executive pay, basically giving a thumbs up or thumbs down on whether they think the company's top managers are being paid fairly. This vote isn't binding, meaning the company doesn't have to change anything based on the result, but it's a way for shareholders to voice their opinion. In this case, about 775 million votes were cast to approve executive compensation, with roughly 15 million against. It's a pretty strong show of support. There was also a vote specifically on the Carnival PLC directors' pay, excluding the part about their overall pay policy. The shareholders mostly approved, with 776 million voting in favour, while about 15.9 million voted against. Again, it's non-binding, but shows the shareholders' sentiment. Next, there's a vote that sounds similar, but it's about approving the company's overall pay policy. Shareholders voted overwhelmingly to approve it, with 785 million votes in favour and only 6.8 million votes in favour, and only 6.8 million against. This shows that shareholders are generally happy with how Carnival is structuring its executive pay. Time to talk about the accountants. Shareholders voted to appoint Deloitte L as the auditor for Carnival PLC and to confirm that Deloitte & Touche LP will continue as the accountant firm for Carnival Corporation. Think of auditors as the people who double-check the company's math to make sure everything is accurate and off old board. There was huge support for this, with over 960 million votes in favour and just a tiny fraction voting against. The shareholders agreed to let the audit committee decide how much to pay the auditors. About 959 million voted yes, compared to about 4 million against. Shareholders got to formally receive and review the financial reports from Carnival PLC's directors and auditors for the past year. Nearly everyone voted in favour of receiving these reports, signalling they trust the company's financial reporting. This is about giving Carnival PLC the go-ahead to issue new shares. Think of it like giving the company permission to create more slices of the pie. 919 million votes approved it, while 44 million voted against. Basically, this means that if Carnival PLC issues new shares, they don't have to offer them to existing shareholders first. It gives the company more flexibility, but could dilute the value of existing shares. Around 945 million voted in favour, while 17 million voted against. Lastly, shareholders voted on updating the company's plan for employees to buy stock. 709 million votes approved, with 2.3 million against. This suggests that shareholders are on board with helping employees become owners of the company. Now, what does all of this mean? Well, it looks like shareholders are generally happy with the current leadership and direction of Carnival. Most of the votes were overwhelmingly in favour of the board's recommendations. However, the votes against Stuart Subotnick and on executive pay suggest that some shareholders have concerns that the company needs to address. Overall, Carnival seems to be sailing in a direction that most shareholders agree with. They're re-electing the same directors, approving executive pay, and giving the company the power to issue new shares. But it's also important to watch those dissenting votes, because they might signal potential problems down the road. Thanks for watching. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more corporate deep dives.